Hi, hello, welcome to this video all about car loans. Maybe you've seen the headlines. Americans owe a heck of a lot of money for our cars. A lot of us are falling behind with those payments, and so many of us are so late the delinquencies are rising like we're in a recession when we are not. That is weird. Something strange and deeply troubling is happening in the world of auto loans. I'm R.J. policy analyst with Frontier Group and lead author on our recent report with U.S. PIRG called Driving into Debt that looked to answer some of these exact questions. Why the heck is auto lending so out of control, and what the sweet blue blazes can we do about it? So what is happening? Right now, we not only owe a lot for our cars, we owe more than at any other point in U.S. history. And that trend is relatively recent. Since the end of 2009, the total amount of outstanding auto debt has increased by 75%. Go on, just put the graph on my face. Look at this, this is crazy. Dark red line, both lines matter, whatever, it's nominal versus, just look at this, 75% rise. Okay, moving on. It's not only that overall auto debt has reached historic levels, the number of Americans who own that debt is the highest it has ever been. Right now, 1 in 3 Americans are paying off a car loan. That is literally the look to your left, look to your right, if it's not them, it's you joke, except for $1.28 trillion in the hole. The super worrying part, though, is that piece about how many of us are falling behind on payments. You see, delinquencies are rising even though the economy is improving, and that's not really how economies are supposed to work. Even though unemployment is low, 7 million Americans have missed at least 3 monthly car payments and are at risk if the economy has another downturn or gas prices go up. Now, it's been clear for some time that something is just not quite right. It was actually 4 years ago, the first time that the comptroller of currency, he's the head regulator of banks, first waved his red flag that's only been getting redder since. We'd seen some of this before. With houses. Come with me on a journey back to 2008. Obama got elected, we finally got our long-promised Sex and the City movie, and there was the mortgage crisis. You know, that thing where Wall Street investors making money off of mortgage securities push lenders to make worse and worse loans until the bubble bursts, leading to the crash of the entire U.S. stock market, the biggest federal bailout in U.S. history, 4 million people losing their homes, 8 million people losing their jobs in a 1.5 year long recession. It was terrible. But at least we learned some good lessons, right? Well, as it turns out, one of the biggest lessons Wall Street learned during all this is that while those mortgages were going kaput, auto loans were actually holding up pretty well, not losing them a bunch of money. You see, during the recession, people began to think differently about their debt obligations. It used to be that when you hit financial straits, the thing that you would pay until your very last was your mortgage. But during the recession, the thing that people began to pay most reliably was their car payments. That's in part because, as this horrifying Washington Post story accounts, a vehicle is critical to getting to work, and someone can live in a car if all else fails. That's right. Auto debt performed pretty well on Wall Street because you can sleep in your car, but you can't drive your house. And investors noticed this. With the banks and the car companies bailed out by the federal government and interest rates at all-time lows, investors were looking for something to do with their money. And lending money to people to buy cars just looked really good. And because interest rates were so low, people could finance a car for relatively cheap. And lenders made this even easier by spreading out our payments over 5, 6, even 7 years, but leaving a lot of consumers in the process owing more for their cars than they're even worth. And even then, a lot of people couldn't afford to buy a car because cars are expensive. So, of course, enter subprime lending. There were a whole host of deceptive, abusive, and downright predatory tactics that some firms undertook to get people, particularly those with poor credit histories, locked into loans with insane interest rates and long loan terms and covering expensive add-ons that range from completely ridiculous, like decorative window etchings, to things that sound like they might be a responsible choice, like gap insurance. But that's not where it stopped. Some of these tactics started to feel like a Groundhog Day repeat of the same garbage that got us into the mortgage crisis in the first place, like not giving a flip if the person signing the paperwork on the other side of the desk could ever actually repay that loan or not. It's bananas. But if you take a deep breath and you zoom out a bit, the whole thing becomes even more bananas. Because the root cause of this, really, like the reason that this crisis has developed the way it has, is because we have built so many of our communities in this country to need a car for every single thing, to the point that it is impossible in much of America to live a full life without one. I mean it. We have an insane number of cars in this country. 91% of U.S. households have one lying around. That is more than the number of households who have a dog, who use Netflix, or who even have a smartphone. But you know a big difference between having a dog /Netflix /iPhone and a car? It's the huge freaking loan you take out for it. So many people needing cars is not a place that we arrived at by accident. Since World War II, most of our new development has been to sprawling suburbs where spread out housing and zoning laws have made it such that even needing to do something simple like go to the store to pick up milk means getting in your car. And we've spent trillions of dollars connecting these suburbs with supermassive highways where we spend an ever-growing amount of our lives stuck in traffic staring at all the other people struggling to pay off their cars. And because a lot of cities, even those that had transit at one point, have let those systems fall into disrepair, a lot of us just have no other choice. But here's the thing, it doesn't have to be like this. There are all kinds of cities around the world where you can get around just fine without a car. Of course, you can have one if you want, but the point is that you don't have to. And it turns out there are a lot of American cities working to figure this out with more buses and more transit, more bike lanes and sidewalks to get you from one place to another safely. Even in rural communities, places like central Montana or Plainview, Nebraska, folks are craving more options for how to get around. I know back in my home state of Kansas, there are plenty of people who would love to live in a community where it's safe to walk or to even take the kids for a bike ride. But also, let's face it, most Americans are probably going to have cars for a long time to come. And so people deserve protection when they go into a car dealership to ensure that they're not going to get screwed by some dealer who couldn't care less about their long-term financial health. And ultimately, Americans deserve choice, including the ability to choose whether they want to have a car in the first place. In the meantime, if you find yourself having to take out a loan for a car, we've put together some resources to help. So the back of our report includes a list of common tricks and traps to watch out for. Our partners at U.S. Park Education Fund have put together consumer video tips guides, pretty cool. Other groups like Consumers for Auto Reliability and Safety and the National Consumer Law Center have some great resources on their website as well. You can find links to all of those below. And in addition, if you want to read more about car dependence and transportation systems and consumer protection with maybe a little bit less yelling involved, you should check out our site at frontiergroup.org. Thanks for watching. I'm RJ.